Welcome to Technical Tuesdays. This is Razak, Senior Trading Strategist here at CMTrading. And today we're going to be discussing probability plays. Now this is still part of our money management series, so stay tuned. But before we start, smash the like button, subscribe, share with friends so that you can help our channel grow, especially because it's free added value content that you could share. Now probability plays is probably one of the single reframing concepts that new traders could become experienced traders like that. And it's a very easy reframing, and I really mean this. So stay tuned, okay? Listen to what I've got to say, and then you could leave your comments down below whether you agree with this or not agree with this, okay? So in any given trade, okay, when you're entering the market, let's say you decide to buy Microsoft stock, okay? It's $304 and you bought it, okay? 100 shares. Now, you have basically a 50-50% chance of making money or losing money. Those are your outcomes. Not making money is not much of an option if it remains unchanged, okay? That really doesn't happen often in the market, but you have a 50-50% distribution of the possible outcome. You either made money or you lost money. You're with me? It's very simple. Now, what if you could add just a little bit, okay, of instead of 50-50 towards your favor? So even if you did 51-49, that puts the edge in your favor. Now, it's not a big thing. It's not a huge thing. It's just a little bit of an edge towards your favor. Now, I completely agree that this is not the best trading situation. It's probably not the best trading strategy, but it becomes interesting because then you have one up against the market. Now, what if you could add that a little bit more to your favor, 70-30? Then it really becomes very interesting. 70% chance that you're going to succeed in the trade and 30% chance that you're going to lose. That becomes much more interesting. The odds are much better to your favor, right? And if you could even take it one step further, 90-10. If you could put yourself in a 90-10 position and you take those advantages in the markets, those are the holy grails of trading. Okay, that is really what you should be looking for. Now, how do you get to this position? How do you get to a position where you're going into the market and expecting somewhere between 70 to 90% outcome towards your favor? Okay, so there are basically two kind of trading environments that we're in, okay? I'm not talking about when something is not tradable, when it's trading all over the place. I'm not talking about it. There are two types of environments where we're trading the markets that we can anticipate future movement. The first one is a range-bound trade. Now, when we're trading range-bound, it's jumping off of two locations, okay? That's basically what it is. And when you have a resistance on the top and a support on the bottom, it's basically just funneling between these two levels, okay? Not all the time, but most of the time. Once it gives you that confirmation, you know the levels. You know the levels that you can enter the market and not enter the market. So I'll argue that anywhere in this red zone, you don't enter the market. But once it passes one of these green zones, okay, the green lines, that's your entry point. On the bottom, you could buy it. On the top, you could sell it and flip it, even sell it short. And when it goes back to the bottom line, you could sell it or cover your short and buy it again in the anticipation it's going to go back up. And you're just playing the levels. That's all you're doing. But guess what you're not doing? You're not trading anything in between those lines, okay? You're not trading the red zone. The red zone is not touchable. This happens on a regular basis, that we find ourselves trading between two ranges. And it happens in the markets all the time. Now, this range has to be significant. If you're trading Forex symbols, it has to be something like 50 to 100 pips range, okay? So it becomes significant. So your entry points are decently placed, okay? Either on the bottom side or on the top side, but they're there, okay? And this is really a very simple concept. Now, what if you're in a trending market, okay? So a trending market, if we're looking at an uptrend, okay, it has two levels as well, okay? It has higher lows, okay? And that's how it's an uptrend, and it has higher highs. And you could pretty much level the channel as it's going higher. Now, guess what you're not doing here again? You're not chasing this and trading it somewhere in the red zone. You're buying it at the bottom and you're selling it on the top. Guess what you're not doing either? you're not playing the opposite trade on this. You're not selling this short when it's going up higher, because guess what? It's on an uptrend. So you're playing two probabilities towards your favor. Number one, you're trading towards the trend, okay, together with the trend. That's where we say the trend is your friend. And you're buying the pullbacks. You're buying every time it comes in the anticipation it's going to go even higher. And these type of situations happen also all the time. Now, I'm not going to highlight the downtrend. That's just the opposite of this, right? But this and the other chart that I showed you before, the range-bound trading, as long as you're not trading the red zones, you could earn much more. And your probability is much to your benefit. You're not going from a 50-50. You're somewhere between a 70 to a 90%. Yes, there's that possibility that we'll break the low or we'll break out of this. That's true. But as long as you're in a trending market, whether it's range-bound trading, okay, or ranging upwards, okay, which is a trending market, you have the probability in your favor. And this concept, many traders just don't get it. They chase these type of situations. They chase it when it gets up here, they buy it, goes a little bit against them, they sell it. And then guess what happens? It makes a new high. And then they don't know what to do themselves. I had this. I bought it, but it went higher. I chased it. Don't chase it. Wait for it to come back to you. Wait for it to hit the support line in a range-bound trading, and then enter it. That adds to your probability twofold, and especially if you're in an upwards trending market. Thank you for joining me for today's Technical Tuesdays. We'll see you here next week. Thank you.